We had exactly the same thing last time Trump was elected. The dollar was strong, rates went up, liquidity contracted, the market had a big rally, which is Bitcoin. And then in January, because of the lag, what we found was a sharp 27% correction in Bitcoin. And then it ripped higher. Ripped higher so much, in fact, that it went up 23x. Now, I'm not expecting that because this was a much earlier cycle. But what we're saying is that correction is not to fear. That correction is just a marker point from phase 1 of the banana zone to phase 2 of the banana zone.
History has shown us that major Bitcoin rallies often come after a sharp dip, and according to Raoul Pal, the next one could be just around the corner. Raoul Pal, the CEO of Real Vision and a seasoned macro investor, believes we're on the cusp of a bullish momentum shift. Crypto enthusiasts often turn to past market cycles for clues about what's to come, and right now, Pal sees plenty of indicators suggesting an impending rally. In the past, when Donald Trump won the presidency, the dollar rose, interest rates increased, and liquidity briefly tightened. Despite these headwinds, Bitcoin experienced a massive spike before retreating 27% in January. But this was just the beginning, as Bitcoin surged again, climbing an astonishing 23 times its value. While the current market conditions may not mirror that earlier cycle precisely, Powell is confident that one thing remains true: short-term corrections often pave the way for significant gains. Stick around until the end of the video for more of Raoul Pal's valuable insights. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Raoul Pal.
Phase 2 of the banana zone usually goes into US tax season, which is like April. Then there's usually a consolidation because people have to sell tokens to pay taxes. And then there's usually phase 3 of the banana zone is the rip into year end. And that's all driven by the liquidity cycle. So we can see these banana zone periods as they start appearing. Bitcoin just does this every time, like Doge does. So we've just broken that part of the cycle. So this is the start of the banana zone as we start accelerating higher. Going back to liquidity, here's global M2. You see, global M2 does this a lot. It also wedges. I love a wedge. They're the best chart patterns in the world. And what happens is it has a break higher, then this consolidation. It's happened every time we've got to the banana zone period, the kind of US election cycle, stuff like that. So we've done that. We've corrected the breakout. Now, global M2 is actually driven by the strength of the dollar. Now, the dollar has started to weaken. We expect it to weaken going forwards. And that will then reignite the next phase of the banana zone as we start bouncing higher. You can see those corrections in M2 were short. Now, the reason being is we've got to roll all of this global liquidity. We've got massive amounts of debt to roll over, and you need liquidity to do it. So that is the game, the big game, the everything code game that I've talked to you about. So the everything code game is very much at play. This is a phase, the early phase of the breakout. This year is the year of liquidity, and that's why the year ahead, and that's why the banana zone plays out so beautifully. So we talked about global M2 being driven by the dollar. So let's look at the dollar, and also rates is the other part of financial conditions and liquidity. So what we're finding is that the dollar, as you can see, and rates had moved away from trend. That was the strength that we saw. This is what creates the down move in global liquidity. Now, what's interesting is the Citi Economic Surprises Index, which is an index of whether the economy is beating forecasts or underperforming forecasts, says we should now have a period of underperforming forecasts because it was driven by the tightening of conditions from the dollar and rates. Now, obviously, we know if the economy starts underperforming forecasts, like we just saw the unemployment rate rise to 4.2%. Once we start to see things like that happening, what happens is people start thinking about we need to cut rates more. So that's a very interesting thing. So here in white is rate cuts priced in. Very few rate cuts priced in. So there's like, I don't know what the scale is here, but there's very little rate cuts priced in, but it's driven on a forward basis by the dollar and the long end. So it's now saying, as we weaken economic growth, we should start to see rate cuts. And then, as you can see, we're starting to see the pickup again in financial conditions, which is important, and I'll come into that in a minute. So when you put it all together, they're all the same thing. Fed rate cuts, the DXY, 10-year bond yields, they're all highly mirroring each other. 10-year bond yields seem to be suggesting faster and faster that the dollar should roll over and rates should roll over too. That creates financial conditions. And now what we've got here is financial conditions index, which is rates, the dollar and oil prices, has been consolidating for a period of time. And it is suggesting that the ISM, which is the business cycle, the Institute Supply Managers Survey, should be much higher, i.e. we've got economic growth to come. It leads by 9 months. So in 9 months' time, the economy will be a lot stronger than it is today. And this is going to be important for you. So all of the stuff we talked about, rates, the dollar, even oil prices, all drive financial conditions, which drives cryptocurrencies, which drives markets in general, which drives the business cycle. When we look at the forward-looking basis on the business cycle, we can see things like the Philly Fed. Well, their new orders index is exploding higher. Now, whether this is just on the Trump victory or whether it's on orders they see in advance, not sure yet. Philly Fed expectations index exploding higher. Empire Manufacturing, that's for New York, exploding higher, all suggesting the ISM is going to be super strong going forward.
Thanks for watching.